it's possible we could see a breakout on Bitcoin above this level in the near term. Now, again, you might see people getting very bullish in crypto, saying, oh, here we go with all-time highs. Don't get too excited.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
We're going to go over so much. We got the Fed decision today, 2 p.m. Eastern time, 2:30 Jerome Powell comes out with his press conference where he'll answer questions, and ultimately I want you guys to be ready to make money today. So basically what we have here is a poll. I said, does the market rally after the Federal Reserve decision tomorrow or fall? And what's fascinating about this, guys, look at the split here. You have chop and remain unchanged, 35%. You have fall lower, 30.8, and rally higher, 34.1. Personally, I don't know if I've ever seen numbers that close when it comes into a Fed's decision. What this tells us is clearly people have no clue, and I'm going to include myself on that. In general, based on the Fed today, you know they're not going to raise rates, so that's not even an issue. But the question is, do they guide the market to expect one more rate hike in November or December, or do they basically say it's all data dependent and therefore don't commit to anything? And right now, again, the stats are showing us that maybe in December there's a small chance, but it's becoming, to me, less and less likely that the Fed will raise again. All right, so again, I thought that was fascinating here in regards to the numbers of votes for that poll. Now, enough of that. Let's get into the markets here. What do we have going on? Let's first talk about oil. Now, oil, guys, you guys know I've been bearish on oil the last few days. I've said, listen, everyone else is bullish. If you go online and you go on social media and you talk about oil falling, you're attacked. People say it's going to $120 a barrel. What happens? And what have I talked about in these game plans? The bells should go off in your head. All right, when you hear on CNBC and Fox Business about people saying it's going to go higher, get in oil stocks. What should your head do? Start vibrating. It should say, be careful here. These are actually probably a short. And what do we see here, guys? This was my level right up here, right up in this upper range. And sure enough, what has happened here? We've seen oil fall 2 days in a row, going from above $92 a barrel, close to $93, back down to $89.51 right here. I even told you guys I was short a little bit of oil, and again, beautiful little drop right here to put us in the profit in InTheMoneyStocks.com's verified investing alerts. Okay, so number one, looking good here. Now, how far could oil pull back? Now, the general consensus is this. What you want to do is you want to rely on trend lines. So to rely on trend lines, what we simply want to do is we want to draw them in. So we take the low pivot down here and we connect it to this pivot right here. All right, so right away, that gives us a general guidance of where to go. Then we take note of this pivot. Now again, let me just go over what a pivot is. A pivot is any sort of move up that then has a subsequent move down. That creates a pivot. Think about a fulcrum or anything like that. It's a pivot point, right? So basically, this is also a pivot, this is a pivot, and this is a pivot. Now, the key to trading profitably, one of the keys, I should say, because it's a lot of mental discipline, to be honest, but one of the things that you want to always look for is multiple factors. A confluence of trend lines that come together to give you the same level. And what we can see very clearly here is if we put a trend line in right there, look at where it goes, right? So again, just drew it in right there. There's your trend line. Okay, in addition, you also have a pivot point going back right here, right? Up, down on the daily chart of oil. Let's draw that in. And that gives us a level right in that same area. So what this tells me is that if oil continues to pull back, right? If oil continues to pull back, what do we know is going to happen? We know that the likelihood is it will have major support right in this $83, $84, $85 range. And so if you're a swing trader, if you're someone looking for a trade, number one, if you haven't gotten in already, you're a little late to the punch. Don't chase. I hate chasing. Chasing is like the number one sin in trading. People chase and they almost are guaranteed to lose money. You want to be a leader in trading, not a follower. Followers are the ones that would short here and then their risk reward sucks at that point. Yeah, maybe they get down here, but now their risk is it goes right back up here. That's not that great risk reward. What I like when it comes to risk reward is I want to be shorting right up here where my risk is super tiny and my reward is all the way down there. That's risk reward. And again, generally people are followers because they're looking for others for advice. But in general, this is why I stress education, is because if you get educated, you become a leader. Leaders are the ones that get in first. They're the ones that see the signs, they read the charts correctly, and they make the maximum amount of money with the least amount of risk. You have to talk about the US dollar. The US dollar, guys, obviously is going to have a move today on the back of the Federal Reserve announcement. And by the way, let's be clear. We saw the stats on Twitter that I posted on Twitter. In general, it's looking like people have no clue. In other words, it might just be a choppy decision. We'll have to watch and see. But what is the dollar telling us? Well, short term, the dollar is overbought. There's no doubt about it, right? If we look at the dollar here, the dollar has had this big move to the upside. We are above this pivot high right here, but we're not too high above it. Now, what I want to do next is go to a larger time frame. Let's look at the bigger time frame. So we'll make this into a time frame game plan, which is so important to understand. So now if we go to the bigger time frame on the US dollar, the weekly chart, what do we start to see here? We start to see a sharp move up, a sharp reversal, and sideways consolidation. And what we have is a trend line going back to 2021, right to this low. All right, that was, by the way, that was October of 2022. What was important about that is that is when the stock market bottomed, interestingly enough, right? So again, coming back in here, actually it was a little bit before, but either way, that was, again, check that. That was in October of 2022. That was mid-summer, and we saw the move up on the US dollar there. But my point here is this, is that as you're coming up here, all right, and by the way, this was the top in when the market bottomed. That was the market bottomed and the dollar topped, which is correct. Usually the markets move inverse. But going back to what our likely scenario is, what we have is a lot of resistance right through here on the weekly chart of the US dollar. So again, as a technician, what do I look for? I look for what are my probabilities. Everything I do is probability based, and that's what a lot of people don't understand. You're never going to be 100% right. I've made plenty of bad calls in my career, but it's based on percentages, meaning that about 75% or more of my calls work out, 20% don't. In any case, what this tells me is that the dollar is 1, 2, 3, 4, 5, 6, 7. We have basically a time count here into resistance, right? Into all these pivot points right across here, and I'm expecting a move down in the near term. What that implies is that in general, we should be seeing a slightly less hawkish Federal Reserve, maybe a Federal Reserve where the market starts saying, hey, listen, we're not going to necessarily anticipate a rate hike. So the key is by looking at all of these charts, the dollar, the yields chart, you can get a sense of what the market is anticipating. And when I say the market, folks, I'm not talking about, the retail investor. I'm talking about big money. What is big money expecting? Because that's what's going to influence the dollar. You don't see mom and pops trading the dollar. You just don't. It's big money trading currencies here. You have big money trading commodities, big money trading bonds. That's the key right there. We have to look at Bitcoin. I always try to go over Bitcoin really quickly for you guys. Again, what have we seen? Trend line hit, pulled back. Trend line pierced, pulled back a little bit. Trend line pierced, stalling here. So again, the trend line is working. That's what it's supposed to do. It's resistance, right? And again, trend line to trend line to trend line right down there. So the question I have, though, is this. Today we have a Federal Reserve decision. If we're hovering here and the Fed causes the dollar to drop, let's say it gets more dovish, it's possible we could see a breakout on Bitcoin above this level in the near term. Now, again, you might see people getting very bullish in crypto, saying, oh, here we go with all-time highs. Don't get too excited. Let the charts guide you. Take the emotion out of it. Again, as soon as I got control of my emotion and learned the charts, I became a 10x better trader, 100x better trader, basically a profitable trader. The emotion is what screws you every single time. Look back at all of the trades that you've done. You either went in too heavy because you were emotionally thinking it was a no-brainer, or you got whipped out of the trade because you got emotional and you probably had too big of a position. So, in any case, this is what we have here. If we break out on Bitcoin, this is your short-term resistance right here. It's just about 28,400 to 500. That would be your next target to the upside. If it gets through that, this trend line up here, which is right around 30,000, the even number of 30,000, that would be your next level of resistance. All right, so we'll watch that very closely.